let's move more broadly. Let's get some insight on what 2026 might look like, what trends you need to look out for. For that, we welcome in Patrick Mueller, RFC and president at Bella Advisors. Great to see you, Patrick. I'm taking a look at the notes you sent over, and they're always so thorough. Thank you for that. You say everything is fine as long as tech keeps working. If that's true, how fragile is this market if we were to see just one or two of these big tech names slip?
I think it's going to be very fragile, Marley, because last year, what was a statistic that was very troubling to me is that 40% of the S&P finished at a loss last year. So you've got tech that's just been such a big driver, and that's really been propping everything up. So if you have somebody like NVIDIA, right, where their earnings are going to be coming out soon for the last quarter, somebody doesn't meet earnings, there's going to be some type of catalyst, and that can definitely start bringing things down very rapidly, not just for the tech sector, but everything, because it's been propping everything up so much here lately.
And I want to talk about another 40% metric here. It's just slightly under at 37%. The top 10 stocks in the S&P 500 now comprise about 37% of the S&P. That's higher than the dot-com peak. Is this, to you, a sustainable makeup here, or are we potentially flashing a warning sign?
Well, I think it could definitely be a caution. Anytime we're always reaching new highs, we're going to see a lot propelling forward in the tech sector, and AI has just been such a driver in that. But the big difference between the dot-com bubble is back in the dot-com era, there were no earnings. You had stocks going through the roof, and the companies weren't even making money. So now companies are making money and showing good earnings. So it's just a matter of, are they going to keep that pace? Is something going to happen? Is there going to be some type of catalyst that's going to cause that to fall backwards? So I think long term, I think we're going to continue to see good growth from tech companies and the AI sector. But over the next 3, 4, or 5 years, long term it's going to be good. But we're definitely at some point, I think, going to have some type of catalyst where the grass is going to get cut at some point.
And as we're now kicking off earnings season, what are you watching most closely to see if this rally can continue?
The biggest thing I'm looking at is the tech sector. That's been the biggest driver. So we've been diversifying a lot and trying to get into different sectors. So, great other things to look at is, value companies. I love Berkby, companies like that. Getting into energy, things that are going to be long-term drivers, utilities. With all of the AI, it's really staggering how much energy is going to be needed. And so I think that's going to be a huge push of just diversifying. We want to ride the train of the tech and everything that's happening. You really have to right now. It's just we want to be cautious and make sure you don't have too much money that's tied to that stuff. So, Warren Buffett has always been a big proponent of having so much cash, so when we do see these downturns, that he can pounce on the opportunities and start buying up stuff at a discount.
So, Patrick, in tech, how should investors be looking at being selective within AI and cloud?
I think the big players, NVIDIA, AMD, Google, it's Microsoft. It's hard to bet against those companies because they've got so much money that they are pouring into AI right now. It's really crazy how much money is being poured in. So it'll be interesting and kind of ride that train, I think, until that money starts drying up a little bit and they don't have as much disposable cash. And so I think, maybe around summertime we might see something like that. But I would just be cautious just to make sure you don't have too much tied to that particular sector. But it's hard to stay away. It's so attractive.
It certainly is, especially when there are new headlines every single day about that space. But in terms of other sectors where you're finding opportunity, what else are you looking at?
Well, the other sectors, we can look at precious metals. I think as we start seeing a lot of uncertainty, and especially as we have a lot of global unrest, stuff going on with Iran and stuff that was going on with Venezuela, the dollar weakening, I think we're going to continue to see gold and silver trending upwards and until people feel more confident about what's going on. Consumer spending is or credit card debt is at all-time highs. So that would be a big thing that I'd be paying attention to moving forward into the future when that trend is going to pop. So I would be, keeping an eye on that as well.
And so within precious metals, we've had this conversation about gold, and we've seen silver surging. Gold miners also becoming a big part of the conversation here, as we've seen some really strong performance there as well. In terms of the mining play, do you think that is easy money that's already sort of been taken off the table there, or are we still early cycle enough for people to get in here?
I think we're still early cycle enough. I think there's still so much uncertainty, and you have, the central banks, they are buying so much gold. It's crazy right now. So I think we're going to start seeing more and more money, pouring into those different sectors. And then like with silver, we're going to continue to see that heating up with the solar, electric cars. There's just a big demand for it, and it's going to continue to be a big demand. So I don't think we're too late. I don't think we're too late for that whatsoever.
And since we're in the midst of bank earnings, some regionals reporting, I'd love to get your thoughts on financials and sort of what you expect from them in 26.
I think financials are going to continue to be strong as we see more and more deregulation. We haven't had a lot of IPOs in quite a while, and I think we're going to start seeing a resurgence of that. And we're having so much money that's going to be starting to come back into the country overseas, reshoring. And so when it comes to banks and financials, it'll be interesting to see how the Trump administration, how that 10% cap is going to play out on credit cards. That could be a disruption, but I think right now with banks and financials, it's pretty strong. So companies like JP Morgan and companies like that, I think are going to continue to do well moving forward.
And Patrick, with the markets, at or near record highs right now, and I know you mentioned Warren Buffett and his investment style of making sure you always have enough cash on the sidelines here. Do you think that we're in a moment where you should be, taking profits rather than chasing momentum here? And almost how much cash should you have on the sideline right now to be prepared for what could happen in 26?
100%. Right now, I'd be having 20% I would take off of the table and have sitting on the sidelines right now. And a good rule of thumb is you take your age, and that's the percentage of your savings that you should have safe and protected from market losses. So we don't want to ever have too much that's tied to it, because who knows when a big downturn is going to happen. You want to make sure that you're not going to take those losses, but it's only a paper gain. It's not a gain until you realize it, and you can actually put those coins in your pocket. So it's always good to take some of those chips off of the table and wait for buying opportunities to come up in the future. You just don't want to get caught off guard. People get into trouble when they get way too overconfident, and you're seeing that right now, Marley. You'll sit next to somebody, in the Starbucks line, and they're talking about how great all their stocks are doing, and that's usually the time when you should be thinking the opposite.
Well, Patrick, always wonderful to talk to you. Thank you for taking time out of your Friday morning to be with us on Trading 360. That's Patrick Mueller, RFC and president at Bella Advisors. And we've got plenty more for you.